Well, thank you for having me. I really do appreciate the opportunity to share a bit about Whitehaven coal. Let me start by noting the disclosure statement here with respect to forward-looking statements. So Whitehaven Coal is an ASX listed company with a current market cap of around $10 billion. We produce a portfolio of high quality and energy intensive coal, which we export to Asia for electricity generation, steel making and smelting. Our three key markets are Japan, Korea and Taiwan, and we have a growing market position in Southeast Asia as well. Our operations are in the Gunnedah Basin of New South Wales, where we have 3 open cut mines and 1 large underground mine. And we have 2 development projects in the pipeline. One is a high quality coal resource close to our existing operations in New South Wales, and the other is a met coal project in the Bowen Basin in Queensland. We employ a workforce of around 2,500 people, with around 75% of the workforce living in regional New South Wales, close to our existing operations. Our coal is railed from the Gunnedah Basin to the Port of Newcastle, where it's loaded at one of 2 coal terminals for shipping to our customers. Now, generally speaking, our sales mix is around 75 to 80% thermal coal and the balance is metallurgical coal. However, because of the nature of our met coal, which is a semi-soft coking coal and a PCI product, we are able to move our coals between the 2 markets, which isn't the case for all met coal. In this last quarter, in fact, our sales mix shifted to over 90% thermal coal. Longer term, however, our strategy is to grow our position in metallurgical coal to a more balanced portfolio. Let me talk a bit about the quality of our coal. So Australia produces high calorific value or high CV coal for the export market, and Whitehaven's coal is at the high CV and high quality end of that scale. Our coals are very low in ash, they're very low in sulfur and low in phosphorus also, and these characteristics are sought after by both thermal customers and metallurgical coal customers. Looking at thermal coal, increasingly countries in our region are looking to install high efficiency, low emissions coal-fired power, which is an increasingly critical component of their energy mix. Now, these high efficiency, low emissions or HELE power plants not only provide much needed energy security for our customer countries, but they also help them to meet their decarbonisation goals as they replace higher emitting older style power plants with these more advanced technologies. Now, when Whitehaven's coal is used in HELE generation plants, the level of CO2 emissions significantly decreases when it's compared to lower CV coal in subcritical power plants. Now, you can see on this graph, for example, that the plants we're fueling in Japan emit around 44% less CO2 emissions than Australia's subcritical coal-fired power plants in Victoria. Now, as part of their strategic energy plan, Japan intends to close subcritical power plants by 2030 and build replacement ultra supercritical or WHC plants. In fact, Japan has 5 new WHC units coming online between 2022 and 24, and Korea will commission 2 new units in 2023. Now, this represents new demand for Whitehaven coal. So looking at the outlook for coal demand more broadly, this graph shows Wood Mackenzie's forecast, and they're forecasting global demand for thermal seaborne coal to largely remain flat to 2030, but then to taper off through to 2050. However, the market is bifurcated, with advanced economies facing demand decline to 2050 as developing countries, mostly in the Asian markets where we are serving, as they continue to grow. According to Wood Mackenzie, by 2030, nearly 85% of the world's coal-fired generating capacity will be in those emerging and developing economies. And as we look at these forecasts, the amount of supply coming from existing mines falls well short of demand. And that's natural because there's been a lack of supply-side response to address this. But in this context, we know that we will continue to play a very important role helping to provide energy security through an orderly energy transition in the coming decades. Briefly, let me look at the financial results for Whitehaven. So this last financial year, FY22, was a very good year for Whitehaven. We experienced exceptionally strong demand and reported record financial results. Russia's invasion of Ukraine and the subsequent sanctions against Russia has increased demand for our product, but we were already seeing demand outstripping supply as a result of underinvestment in traditional energy sources. Whitehaven achieved an average coal price of $325 Australian per tonne in FY22. Now, this translated to $4.9 billion of revenue, a record EBITDA of $3.1 billion, $2.6 billion of cash generated from operations, and a net profit after tax of $2 billion. And we paid, or we will pay, $1 billion of taxes and royalties in relation to FY22. Now, because of these fantastic results, we fully paid down our senior debt facility and we paid a final fully franked dividend of 40 cents. Our capital allocation framework is clear. First, we will use cash to maintain and optimise our existing operations. Second, we will retain cash to maintain balance sheet strength and to have funding optionality and flexibility for the future. And third, we will return capital to our shareholders in the form of franked dividends and share buybacks. And in fact, we recently completed an initial 10% share buyback, and share buybacks are expected to remain a feature of our capital management strategy going forward. The board aims to return at least 20% and up to 50% of NPAT to shareholders through dividends and buybacks combined. After these priorities, if there's surplus cash, we'll use that to invest in growth, which may include related M&A or investment in our own development projects. However, if buying back additional shares continues to be more attractive than investing in growth, then our payout ratio may be higher than 50% if there is surplus cash. In FY22, we were the #1 performing stock on the ASX 100. We delivered a total shareholder return of 154%. And in the first quarter of FY23, we continued to perform strongly. We generated a further $1.55 billion of cash in the 3 months to September 22, and the coal price continues to strengthen. We achieved an average coal price of 581 Australian dollars per tonne for the quarter. Weather events and labour constraints have impacted production and sales volumes, but the business has been performing well operationally in an underlying sense. And Whitehaven is well placed to continue to supply the very strong demand for our product that we're seeing. And we see that demand for high quality coal continuing to outstrip global supply for some time to come. And as a result, we expect coal prices to be well supported and Whitehaven to continue to deliver strong returns. We will release our second quarter production report in January, and the following month in February, we will release our half-year results. In the meantime, though, there is more information on our website, including our latest sustainability report. Our sustainability report includes our TCFD reporting, information about our safety and environmental performance, progress against our diversity targets, and the strong contribution we make to the local communities in which we operate and which our people are very proud of. Our contact details are on the website, and we're always very happy to answer questions that investors may have. So we appreciate this opportunity and the interest, and thank you for your time.